Guys, thanks for clicking on another one of my videos. This is trade week 5 as a full-time live trader. I didn't trade too much this week. I had a lot of things going on with the shop and with my house. We are selling off a bunch of stuff because we're planning on making a move here pretty soon. So I had a really hectic week. But we can start off with the trades I did make. Monday, I started off a little heavy when I got up this RGSE right here. Let me start with the watch list. So on my watch list was SNGX, SIFY, TRCH, CYTR, RNVA, and LLNW. Now, of these, the top 3 were my picks. The other I got off of somebody else's watch list, probably Investor Underground is where I got that one. But I did not actually play any of my own that day. They did not perform the way I thought they would. I did play RGSE and CYTR. Now RGSE, when I got up, it had a morning spike here, a morning gap, and it was continuing to build volume here where it was going higher. So I got in it right at market open. Not so good for me because it took one candle spike here. I think I was up $20 or $30 when this spiked up here, and I did not get out soon enough, and it immediately crashed down. Um, and then I held it too long, just waiting on it to come back. Even though it was making a downtrend, I still believed that it was going to come back, and I don't know why. I did not do my research on this one. Had I have just gone back and looked at the chart, I would have seen that the spikes don't really hold. Maybe it was an ideal short, but either way, I ended up losing $50 right here, first thing Monday morning. Really started the trade week off bad. Shortly after that, I jumped into CYTR. They had some news come out, 424. So they had some news come out, and they took a run here. I got in at 77 cents, right about here. Not so hot, right? In the scheme of things, it was great, but not so hot. So I got in here, and then it dipped down here, and it broke. I had set my line of resistance, or line of risk, right here. And it barely broke it for one candle, and I was already scared from losing the $50 this morning, so I got out. It immediately started climbing and climbing and climbing. I finally came back the afternoon. I decided I would get in this again, and I got in it at 91 cents, which is up here. Now, if I'd held from 77, I would have made some money, but I was emotional right here. I just lost some money, and so I got out too quick. It did end up, I got back in at 91 cents, and believe it or not, I held this thing all week long waiting on it to do something. I finally did get um, irritated with it on Thursday, which was the 27th. I sold it after it failed this morning spike right here. I was just tired of watching it failed spikes. It never did return to a 91 cents where it was my profit level. Um, so when it failed this spike here, I went ahead and got out. I believe that was going to be the high for the day. And of course, everybody lost interest in it, and it did end up tanking Thursday afternoon towards close, and then all day Friday just rode the bottom. So CYTR, I lost $8 on it on Monday with this spike from 77 to 75. I probably sold it somewhere in here, 75, 73. As soon as it broke this line right here, I was out. So I lost $8, quick $8 there, but I held it all week for another loss of $25. So not so hot there. On Tuesday, I did one short, so that is 425. Let's go to a 5-minute candle here. 425. This thing had spiked up pre-market and had already started failing. I really didn't do anything spectacular here. I just joined the trend and got out early. I made $14 on this one over a 20-cent drop. So I think I got in right in here, and then it clearly hit a bottom and started coming back up. So I covered right here for a small gain of $14. On Wednesday, I didn't have anything on my watch list for Tuesday. For whatever reason, Monday was pretty busy and I didn't get out here to do my research. So I didn't have anything for Tuesday. On Wednesday, on my watch list, I had SDLP. Oh, sorry. I had SNGX, PZRX, IMMY, Fuel, DELT, CYTR. Obviously, I was watching because I was still in. And MVIS, I thought might make another good short, but I didn't end up playing any of those. I did play SDLP, and I got in at 829 at $3.19. So I bought in 829, $3.19. Oh, this is 25. We're talking about 26. Oh, $2.19. Sorry about that, I was on the wrong stock. SDLP on Wednesday, 829. I got in at $3.19. This first big green candle. Now, one of the things that I've learned about pre-market and post-market or after hours is that you should really treat those as separate markets. Okay, if you buy in pre-market, you should sell out pre-market before the opening bell here, where stuff really changes. I don't like holding after hours. A lot of times it either goes up or gets stagnant. I feel like just watching the little blue lines is kind of annoying for me. So I like to be out at the end of the day. And I'm learning now that if I'm going to buy pre-market, I really want to be out pre-market. I would like to treat this as two separate markets because, as you can see, this is one chart, one pattern that it's set up here, and then this is a completely different. So I got in here at 319, and at 846 it was at 338, and I felt like I should have sold right there. I really wanted to sell, but I thought I would wait and see what happened at open. Well, as you can see, even before open, we were down to 313, which is in the negative for me. As soon as it opened, I sold out here. Wait, let me see. Should have locked in profit at 846. 929, it was 313. 936, I was still in it. It was 305. This thing had a 49 million float. It was 10% short. Now, I also learned from Nate in the chat room about short percentage. I asked him late in the week, I checked on one stock and it said it was 10% short, and then I checked on it the next day and it said it was 0% short. So I'd asked Nate to clarify if that meant that all the shorts had covered in the pre-market, if they knew something I didn't, and he told me that the shorts were only updated probably once or twice a week, so that they weren't a very reliable indicator. So I'm going to stop using those. I am going to look at them, but I'm going to stop giving them so much weight. By 9:42 a.m. it had traded 220,000. Its average was 1.1 million daily. I got out at 10:46 a.m., which was here on this candle here, for a loss of $40. Now, this was a bad trade. The chart did not give me, I should have sold here, and I knew it, and I didn't. So capture your profits as soon as you have them. If you're playing 200 position share sizes like I'm doing right now, you should be covering your position or selling out of your stock when you have covered your trade and made $3 or $4 profit. The idea is to make good trades. I'm not super interested in covering the trades at this point. I'm just looking for green numbers. If I can make green numbers, then I will add a 0 to my position size and therefore my profits or losses. But before I do that, I really want to be consistent. 200 shares, 300 shares, even a max of 500 shares if you're playing a super low penny stock. These are safe trades that it's not going to ruin me if I lose every dime of it. So that was my Wednesday. Let's see. Thursday on my watch list, I had MTBC. I had PTN, I had IDRA, I had LLNW, and CYTR as a continuation from Monday. I did not go long in any stocks or short that day. I just sold out of CYTR for a loss, which I covered earlier. And then Friday, I didn't actually do any trades. I had Pran here set up. I had shorts for it. I was ready to short it. I was going to short it as soon as the market opened and it posted a red candle. And right here, there was a fella knocking on my door wanting to pick up some stuff that my wife had sold him. So I had to take care of him, and when I came back, we were in this candle here. So I missed the move there. I had it set up, I had it ready, I had my shares in the montage here all ready to go. We had shorts at the time. It's not telling me that I do now, but I completely missed the move on this one, and then I didn't want to chase. I got here and I could have chased, but it looked like it was stabilizing. I still would have made 320s. 311. I mean, that's really not even worth it. 10 cents is gonna bring you 20 bucks, but we're looking for big moves like this. We want to capture the move and then get in and get out. So I didn't trade anything else on Friday. One of the things that I learned this week was a lesson that I had to learn last Friday, which was to be prepared, or be prepared not to trade. So that was the same lesson I learned last Friday when I was trying to trade at the airport, and I think I finally grasped that lesson on Friday when it was too late. But overall for the week, you can see here I did a total of 4 longs. I lost $123 on all 4 of those longs. I did 1 short for a profit of $14. So shorts are still my money maker and longs are still my money loser. Now shorts are harder to find. They're harder to get prepared to do the short, but actually doing the short, it's pretty easy to wait for the trend to set up and then follow it. If it starts to fail, most of the time it's going to continue to fail. Whereas longs, you never know where the top is. At least with shorts, you can get an idea of how far it's going to travel. But with longs, you never know. It might move 10 cents. It might move $10. All within the next 10 minutes, and that's what you keep hoping for. I can see why most traders are short biased, thinking that most stocks are going to fail, and finding a stock that has been on a 3 or 4 day run up that we have shorts for is simpler than finding a long that may break out. Most of the time, by the time I get to the longs, I have already missed the move and I'm just chasing. So I've got to quit chasing, I've got to focus on making better trades, and I've got to be prepared, which means doing my research every night. That's what I'm about to do right now. So thanks for watching my video. Please click the like or subscribe button if you liked. If you had any questions or comments, leave them in the box below and I'll get to you. Thanks for watching. Have a blessed day.